Good evening, folks. This is a forecasting session. In this session, we will analyze the market for the upcoming week, which direction the market can move, what will be our price in the coming week. Let's find out. So guys, let's start the forecasting session from the cable GBP USD. We saw last week what happened. The NFP data came out and it compelled the cable to move to the downside because the NFP data was too positive, which is a bearish sign for this pair. Let's pull out the trend line and we will draw trend line in the daily time frame, completely aligning with the market. The market touched the trend line. The market has touched the high liquidity zone. So what happened? The high liquidity zone and the trend line halted the market from further moving to the upside. Then they formed this bearish engulfing candlestick, which is on daily time frame. Let's move to the smaller time frame. So, as we know, the data was too much positive, which is a bearish sign for the GBP USD. And apart from that data, if we see technically, the market touched the zone and the market touched the trend line in the retracement move. And now the market will continue its impulsive move and will come to the downside. But before continuing its downside move, the market on Monday may go a little above to consequently encroach this candle, to consequently encroach the gap between these three candles. It is also called as fair value gap. And then the market continue its down move to fill the gaps that are left open by the market. So we are having one gap, we are having second gap, and even at this point, if we see here, we are having another gap. The market will not fill these gaps instantly or in a straight line coming downward. The market will do as it usually does. The market will make impulsive move. The market will make retracement move. We see here the market has created relative equal highs. What happened? The market moved to the upside. The market moved above these relative equal highs, took the buy stop liquidity, triggered the stop losses, or in short, the market swept the liquidity pool which was resting above the relative equal highs, and then the market continued to move to the downside. Let me show you another thing. Let me first clear the chart. Guys, let's say this is the first shoulder. This is the head of the pattern. And this is another shoulder. Guys, what do you think? Which pattern is this? It is a QM pattern, which is also known as the Quasimodo pattern. If you don't know what is a Quasimodo pattern, I have already made a video on QM pattern. I will give a link in the description. Go and watch what is a QM pattern. So it is the first shoulder, then the market formed the head of the pattern, and then laterally the market formed the second shoulder. And on the second shoulder, the market formed this very bearish engulfing candlestick. which is a sign that the market will continue its down run. At least in this pattern, the market comes to the low which it has created while forming the pattern. So I personally think not only for the coming week, but the market will stay bearish in the next 2, 3 or even in the next 4 weeks. Guys, now let's move toward the pair Euro USD. You might know there is a very positive correlation between Euro USD and GBP USD. So if the buys, the direction of the GBP USD pair will be downward, will be bearish, the Euro USD will follow the same direction as GBP USD, because in both of the pair the USD is as a quote currency. So why do you think the market, or let's say why I think the market will be bearish in the coming week? Because at this point the market has created relative equal highs. The market, let me straighten it out, it is sometime it becomes a headache for me. The market went to the upside, took the buy stop liquidity, cleared the stop losses, cleared the liquidity pool that was resting above the relative equal highs, and targeting that liquidity, the market formed this bearish engulfing candlestick. So this is the first sign of the bearish move of Euro USD. Apart from it, the market has formed a bearish channel, upward channel, and whenever the market gravitate in an upward channel, it is a signal that sooner or later the market will break the upside channel to the downside, and it will continue its downward move. So let's move to the smaller time frame and see if we find a setup. All these candles are very bearish. The volume, if we can see, is increasing volume, which indicates that the trend will continue, the move will continue to the downside. I think the market will come a little downside. It will take liquidity from this low, then it will go to the upside. The market will go a little above, it will make a retracement move, and then later it will continue its down movement. So how much down the market can come? The market can come to mitigate this demand zone, or here is another demand zone below the first one, or even the market can mitigate this demand zone. Here we are having gap, here we are having gap too. So at the same time the market will fill the gap and will touch the demand zone to make a retracement move or an impulsive move, which will change the direction of the downward movement. But I think the market is very much bearish. The market will be bearish in the coming week, and even though the market is bearish in the coming week, or can be bearish in the coming week, I think the market, no one knows 100% what is happening in the market. It can also happen the market starts moving to the upside from the very coming trading session. So all these forecasting are the probabilities with higher chances that, yeah, according to the setups, according to the conditions, the market can move either to the upside or either to the downside. So it is not a confirmed 100% confirmed signals or 100% confirmed moves, because no one out there can give you 100% guaranteed move in the market. All these patterns, all these methods, all these techniques are based on probabilities. But for Euro USD and GBP USD, the probabilities are that the bearish move can continue in the coming week or even in the coming weeks. Now let's move toward AUD USD, and at the end we will forecast the gold market. Guys, at this point the market has created relative equal highs, and we saw the market went above these relative equal highs to take liquidity from the market. Not only it went above to take liquidity from the market, it touched the high liquidity zone, which hold the market from moving to the upside, or which works as a magnet in the market. There was a supply zone too, or an order block, which the market touched in the daily time frame, which is a sign that the market will change its direction from the upward move to the downside move. Now let's move to the lower time frame to see what happened. Even in the lower time frame, the market has created this high. The market went above this high, took liquidity from the high, then moved to the downside. There, this gap was formed by the market. This is a fair value gap. The market filled it completely and started to move downward. Now we can see the market has took liquidity from these relatively equal lows. So anything can happen now. Even the market now can make a retracement move to come a little upward to consequently encroach this gap, the fair value gap, or even the market can continue, let's say, its downward move to fill this gap, which is also a fair value gap. And after filling this gap or consequently encroaching this gap, we are also having an order block at this point, which the market can touch, and then it make its retracement move and later make another impulsive move to the downside. So guys, this was about AUD USD. It means that my buys for all the three pairs, the GBP USD, the Euro USD pair and the AUD USD pair, is bearish for the coming week. So guys, the gold is the last pair we are analyzing, we are forecasting. So let's start. This was the last high the market has created. Then the market went above this high and took liquidity, buy stop liquidity, triggered the stop losses and cleared the liquidity pool. What happened? What happened next? The market formed this pin bar and started the downside move, the downward move. Apart from it, if we see, let's say consider it or let's say, let me pull up the line chart. Let's consider this area as the right shoulder. If we see it in terms of head and shoulder pattern, which always forms when a trend is about to change its direction. So that was the right shoulder, or let's say left shoulder. This was the head of the pattern, and this is the right shoulder of the pattern. So all these are signs of a market which is going to the downside, which is going to go in the favor of the bears. And then later on the second shoulder, this huge bearish candlestick appeared. Huge bearish engulfing candlestick appear, which is a sign that the market will continue its downward movement. So let's move to the lower time frame to see what is happening. Let me zoom it out a little. So in the 4-hour time frame, we are having this strong support area. Strong support area because it has held the market several times, and it provided a very strong support for the market to move to the upside. So as we saw, the market has touched this support area. What can happen now? The market took liquidity from these lows. Now the market will need to go a little above to the upside to fill the gaps that are left open in the market, the fair value gaps, this gap and this gap. So after filling these gaps, the market can continue its downward movement, and there are lots of gaps in the daily time frames that are left open in the market. Let's say this is the first one, this is the second one, third one and fourth one. So the market will definitely come to the downside to fill these gaps, and this can be the pattern, which is also known as a reversal pattern, the head and shoulder. So guys, beware of this pattern. It can start a very bearish trend in the market, and the NFP data has helped this pattern to complete, and we saw the data was too much positive, which is a bearish sign for the gold. So what is one concern for the traders regarding the bearish move? The one concern for the trader should be this fair value gap. This fair value gap. Even though our bias is bearish on the market, but still we can anticipate that the market can move to the upside to take liquidity from this high, and it can fill this gap, and then later it can also happen that after filling that gap, the market continue its move to the downside. So anything can happen, but our bias is bearish on gold, AUD USD, EUR USD and GBP USD.